Assalamualaikum warahmatullahi wabarakatuh. Welcome to our video presentation by Group 2. Today we will introduce you to an important concept in Islamic finance called istishna. What is istishna? Istishna is a type of contract in Islamic finance. The word istishna means to make or to produce. It's a contract used when a buyer requests a seller to manufacture goods based on specific requirements. In an istishna contract, the buyer and seller agree on how the product will be made and its specifications. Payments can be made in various ways, all at once in installment over time, or upon completion of the product. This flexibility makes istishna particularly useful for custom-made products. Now, let's discuss the legal basis for istishna and its support in Islamic sources. First, in the Quran, Surah Al-Baqarah, verse 2, Act 2, there is a command to record deferred debts and sellers. This verse supports contract like istishna, where payment and delivery may occur at different times. Second, in the Hadith, the Prophet Muhammad, peace be upon him, once ordered an item from a craftsman with a set time frame to making it. This shows that such transactions are permissible in Islam. Third, based on ijma, Islamic scholars agree that the istishna contract is valid to fulfill community needs for ordering and constructing goods.
Characteristic of istishna. The first one, special order. This is the most prominent feature. The items ordered are made physically according to the buyer's request. There are no finished goods ready to be sold just like that, which means goods are custom-made according to the buyer's request, not finished goods ready for sale. The second one, goods not yet available. So at the time of the contract, the ordered goods are not yet available or still in the production process, which means when the contract is made, the goods do not yet exist or are still in the production process. The third one, detailed agreement. Because the goods are custom-made, the agreement between the buyer and seller must be very detailed, which means item specification, material, size, colors, and turnaround time must be agreed upon in detail. The fourth one, payment. The payment mechanism in istishna is quite flexible, which means payment can be in advance, in stages, or upon completion of the goods. And the last one, production risks borne by the seller, which means the seller is responsible for the production until the goods are as agreed. Istishna mechanism. The first one, initial deal, which means agreement on price, specification, and terms. The second one, financing. In Syari'ah financing, banks or financial institution can finance the project or order goods through the istishna contract. The last one, production completion, which means goods are produced as agreed and then delivered to the buyer. Accounting treatment. The first one, income recognition. Revenue is recognized when the goods are settled and handed over the buyer. The second one, recognition of production fees. Production costs are gradually recognized according to the production stages, which means recorded as the production progresses. The last one, installment payment. If the buyer makes a gradual payment, the amount received is recognized as the income received in advance until the production is complete, which means treated as advance income until completion. Accounting method. Completion percentage method, or percentage of completion. Acknowledging revenue and fees as a job progress is carried out. This method is commonly used in long-term projects and shows income reports more accurately, which means recognize income gradually. The second one, completed contract or method completed. New income and fees recognized after the project or item is complete and submit, which means recognize income only upon project completion. Confession of loss and claim. Loss. Any estimated loss, for instance, higher material or labor cost, are recorded immediately in the income statement. The second one, claims. Claims due to delays or quality concerns are recorded when they can be reliably estimated. The last one, financial statement. The first one, income statement or profit loss report. Revenue and costs from istishna contracts are reported based on the chosen accounting method. For example, percentage of completion or completed contract. The second one, balance sheet. Contract assets and liabilities are recorded based on project progress. The last one, cash flow. Cash from buyers is reported as operating or investment cash flow, depending on the contract terms.
In Islamic finance, parallel istishna involves a seller entering two separate contracts, one to produce an item for a customer, and another to have a third party fulfill the order. These contracts are independent and structured without reliance on each other. Condition in a parallel istishna contracts. 1. Separate contracts. A parallel istishna involves two independent contracts. The first contract is between the initial buyer, the customer, and the primary seller, the contractor. The second contract is between the primary seller and third-party manufacturer. These contracts must not be contingent on each other. 2. Clear and specific detail. The products or service specification must be detailed and clear, including aspects such as quality, quantity, price, and delivery timeline. 3. Fixed pricing. The price must be agreed upon at the beginning and remain fixed throughout the contract unless additional agreements are made. 4. Risk and warranty responsibility. In the first contract, the primary seller is responsible for the risk until delivery to the customer. In the second contract, the third-party manufacturer is responsible for the risk until the product is delivered to the primary seller. 5. No riba. Payment in an istishna contract shouldn't involve interest. 6. Compliance with Syari'ah principle. The product or service shouldn't conflict with Syari'ah principle, meaning it shouldn't be haram, prohibited.
The difference between istishna and salam contract. In salam contract, the goods do not need to be processed. Meanwhile, in istishna contract, the goods are generally custom goods, meaning that we make them according to the buyer's preference. Point number 2, in salam contract, the agreement cannot be cancelled. Meanwhile, in istishna contract, as long as the item haven't made yet, we can still cancel it. The point number 3, in salam contract, the payment is made before the buyers receive the goods. Meanwhile, in istishna contract, you can pay more flexible. In the beginning, in the middle, in the end of the order, you can pay half in advance, or you can pay in installment. The example of implementing the salam contract. Era ordered 20 kilograms of cotton to make pillows in the next 2 weeks. The seller asked Era to pay him 1.8 million in advance. Therefore, the seller must send it according to the agreed date. The example of implementing the istishna contract. Dimas want to order clothes to attend his cousin's wedding. He came to the tailor to discuss about design, type of fabric, and processing time. Dimas paid 15,000 in advance. The rest will be paid later. A day later, it turned out that his mother has tight clothes for him and his family. He also contacted the tailor. Hello sis, I'm sorry but it turned out my clothes were sewn by my mom. Can I cancel them? Oh Dimas, that's fine, it's okay. I haven't bought the fabric yet because there are still many other orders. I'll give you the money back later. Okay? Okay.
The advantages of istishna akad. 1. Price certainty. The price of the goods ordered is agreed upon at the beginning of the transaction, providing certainty for both parties. 2. Gradual payment. Payment can be made in stages according to the agreement, reducing the financial burden for the buyer. 3. Goods to order. Goods will be produced in accordance with previously agreed specification as they are made to order. 4. Increased production. For producers, istishna contract can encourage increased production and product innovations. 5. Financing solution. Istishna contracts can be financing solution for customers who want to own certain goods but do not have enough money in advance. The weaknesses of istishna. 1. Risk of cancellation. If there is a cancellation by one party, it can cause losses to the other party. 2. Delay in delivery. Happen if there are obstacles in the production process. 3. Quality of goods. There is a possibility that the quality of the goods produced does not match to the buyer's expectation, even though it has been agreed upon beforehand. 4. Contract dispute. If there is a dispute related to the implementation of the contracts, the settlement can take a significant amount of time and money. 5. Uncertain production costs. Sometimes the actual production costs may differ from the original estimate, which may affect the final selling price.
Okay, next section will be presentation about the application of istishna in Islamic banking. It's highly beneficial, especially in financing construction, manufacturing, and infrastructure projects. So, the required production or development of custom-made goods, istishna provides a financing method aligned with Syari'ah principle because it doesn't involve interest, being solely based on sales contract for goods to be produced or construct. So the step is, first one is financing request by the customer. The customer submit a finance application to the Islamic bank for a project to be constructed or goods to be produced. And the second is istishna contract agreement, which is the Islamic bank and the customer sign an istishna contract in which the bank agrees to finance the production or construction of goods according to the specification requested by the customer. The third is production or construction of goods. The Islamic bank can either produce the goods if capable or enter into a parallel istishna contract with a third party such as a construction company. And in this case, will be the bank acts as an intermediary between the customer and the third party. Fourth is payment by the customer. Payment under an istishna contract are flexible. The customer may pay upfront in stage installments based on project completion stage or pay in full after the goods are delivered. The fifth is delivery of goods. Once the goods are complete, the Islamic bank delivers them to the customer and the customer inspect the goods to ensure they meet the contract specification. And the last is risk and ownership, which is in this case, ownership risk during production generally lies with the manufacturer until the goods are delivered. So the example of istishna application in Islamic financing, in this, for instance, if a company wants to build a factory and requires financing for the project, it can apply to the Islamic bank for financing through an istishna contract. The bank will agree to finance the project, contract a construction company to build the factory, and upon completion, transfer ownership of the factory to the customer as per the agreed terms. So, the conclusion of istishna in Islamic accounting, istishna has an important role as a financing method for project involving the production or construction of goods based on order. The istishna contract is one of the important instruments in Islamic banking that can encourage sustainable economic growth. By understanding the principle and application istishna contract, Islamic bank can provide innovative financing solutions that meet the needs of the community. And istishna provide a financing framework based on Syari'ah, which is the sales transaction that is recognized in stage during the progression of construction buyer. And istishna has benefit in Islamic accounting as it allows recording transaction according to the state of completion, reduce the risk of premature revenue recognition, etc. Overall, istishna in Islamic accounting supports transparent, prudent, and Syari'ah compliant accounting practices. Through proper recording, istishna enables Islamic banking institutions to provide project financing with the principle of fairness, responsibility, and revenue recognition that doesn't precede realization in accordance with the fundamental values of Sharia.